A quick update and the upcoming 30-year TIPS auction. That's what I'll be talking about in today's video. Hello, members and super savers. I hope you're healthy and well. As some of you know, we've been busy wrapping up some big projects the past 2 months, and we're almost at that finish line. More on that later, because first, let's talk about this week's upcoming 30-year TIPS auction that many of you have asked us about. And frankly, some are a bit excited about this auction already. Here's what we'll be covering in today's video. 1. Why we think the 30-year TIPS likely yields look attractive. 2. Why we're planning on buying at the upcoming auction. And 3. What we have planned for the rest of 2024. For those of you new to us, TIPS stands for Treasury Inflation-Protected Securities. Check out our TIPS video compilation linked in the video description below if you need more details or a refresher. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. This coming Thursday, February 22nd, 2024, the Treasury will auction off $9 billion of new issue 30-year TIPS. A new issue auction for the 30-year TIPS only happens once every year, so this alone is already making this auction something to watch. To get a feeling of what yields we should be expecting from Thursday's auction, let's first look at where previous issues of the 30-year TIPS are currently trading in the secondary market. The 30-year TIPS closed at a real yield of 2.17% on Friday before the market closed for President's Day weekend. We can get another indication of where the yields for the new 30-year TIPS might end up from the tentative yields that some of the leading brokerage firms publish on their websites. Essentially, their best guess at the yields we might see from the auction on Thursday. At the time of this taping, here is the indicative real yield that Fidelity is showing, 2.11%. And here is the indicative yield that Vanguard is showing, 2.152%, with an expected coupon of 2.125% for this 30-year TIPS auction. If the auction on Thursday comes out in the range that we expect, based on the indications we just discussed, we're looking at more than 10-year highs. Any coupon close to 2.125% and any real yield close to 2.19% will be the best new issue auction results for the 30-year TIPS since February 17th, 2011. Do keep in mind that the auction results usually come out a bit different from the last yields in the secondary market, and that these indicative numbers from Fidelity and from Vanguard that we've just shown you can and usually do change all the way up to the time of the auction. But with all these qualifications and uncertainties, possibly the highest real yield and possibly the highest coupon rate since 2011, that's why we've taken a quick break from our current projects to talk about this upcoming week's 30-year TIPS auction. So let me explain why this auction is a good fit for us. Hopefully, this will help you figure out whether this upcoming week's 30-year TIPS auction may also be a good fit for you. Here are the 5 reasons why we're planning on buying at the upcoming 30-year TIPS auction. Reason 1. We think the break-even inflation rate will be higher than 2.28% on average over the next 30 years. For those of you who are a bit newer to us or newer to TIPS in general, let me show you what I mean with a break-even inflation rate calculation. And let's start off first by comparing the yield on the 30-year TIPS versus the 30-year Treasury bond around close of market last week. As I mentioned before, the 30-year TIPS closed at 2.17%. Remember that TIPS are quoted on a real yield basis, meaning that this number is already adjusted for inflation. So an investor who owns this TIPS will always stay 2.17% ahead of inflation. As I always say to those of you familiar with I-bonds, think of the real yield as the fixed rate on an I-bond. The 30-year Treasury bond closed at 4.45%. Treasury bills, notes, and bonds are quoted on a nominal yield basis, not adjusted for inflation, meaning that to make these two numbers comparable, we actually have to deduct the rate of inflation from this nominal yield to get to the real yield. Now, if we take this nominal yield here of 4.45% and subtract out the real yield here of 2.17%, we get 2.28%. This is the break-even inflation rate, meaning that if inflation stays at a constant rate of 2.28% every year for the next 30 years, it makes no difference whether you buy these 30-year tips or these 30-year Treasury bonds. Because at an average annual inflation rate of 2.28%, both the tips and the Treasury bond will deliver you the same 4.45% nominal yield and the same 2.17% real yield over their lifetimes. And if inflation is under 2.28% on average over the next 30 years, then these 30-year Treasury bonds would have been more prudent. Because remember, the inflation adjustment on the tips will be smaller if inflation remains lower, while the Treasury bond will continue to pay its 4.45% coupon rate throughout its life. On the other hand, if inflation will be above 2.28% on average over the next 30 years, then these 30-year tips would have been the wiser investment, because in this case, the tips inflation adjustment would go up to compensate for the higher inflation, whereas the coupon of the Treasury bond would again stay unchanged, meaning you'd start falling behind inflation. We fall into this second group that expects inflation to run higher than this break-even rate of 2.28% on average over the next 30 years, as I mentioned earlier, especially given the higher than expected inflation reports that came out last week, and our general feeling that the ride back down to 2% will be bumpier and lengthier than some expect. Reason 2 for why we're planning on buying at the upcoming 30-year tips auction. Regardless of where inflation will ultimately end up, we think the real yield on the 30-year tips looks attractive. While real yields on 30-year tips have generally come down a bit since October of last year, they are still relatively high from a historical perspective, as you can see here. And we expect that the new issue on Thursday should end up in this range. Reason 3 for why we're planning on buying at the upcoming 30-year tips auction. We expect to hold these tips to maturity. As most of our Diamond NestEgg regulars know, I am generally a fan of buying individual new issue bonds at auction and holding to maturity, but even more so with tips. And that's because unlike treasuries as a general category, tips are not very liquid on the secondary market. Meaning that if you ever have to sell the 30-year tips, you may have to accept a lower price or wait longer for a buyer than you had anticipated. Reason 4 for why we're planning on buying at the upcoming 30-year tips auction. The secondary market volatility doesn't bother us. The lower secondary market liquidity and longer time to maturity means that the secondary market prices for 30-year tips tend to have more movement, both up and down. This doesn't really matter to us because we're not planning on selling early, as I mentioned before. So we don't generally care about what happens to secondary market tips prices. We'll continue to sleep well at night, even if the secondary market prices on our tips may show some red ink occasionally over its 30-year lifespan. Reason 5 for why we're planning on buying at the upcoming 30-year tips auction. These tips match our financial goals and time horizon. 30 years is a long time, but it puts me and Marcus in our 70s and 80s, when we both expect to be enjoying our retirement, hopefully, and when capital preservation and hedging against inflation will be top of mind for us, and the return of an inflation-adjusted principal amount will be highly appreciated. And there you have it, my fixed income friend, the 5 reasons why we plan on picking up some 30-year tips in the upcoming auction. Now, that's us and our financial journey. And everyone's financial journey is different, as I always say. So if you think that these 30-year new issue tips might be a good fit for you and your portfolio, do remember that the auction will take place this coming Thursday, February 22nd, 2024. The cutoff times for any orders can be different by broker, and if you want to make sure that your order arrives in time, we generally recommend you place it with your broker the day before. Now, on the other hand, if you think that actual inflation will be lower than the break-even rate of 2.28% on average over the next 30 years, that real yields will keep trending upwards, or that you'll have to sell before maturity, then the upcoming 30-year TIPS auction may not be a good fit for you. Or perhaps you're someone whose mind and heart beat with the market and your portfolio's every move, or someone who doesn't need inflation protection over a 30-year period, in which case I-bonds or something else altogether might be more suitable for you. And since we're on the subject of I-bonds, let's move on now to the next section of our video. So, while we plan on picking up some 30-year TIPS in the upcoming auction on Thursday, these will not necessarily replace our I-bonds. Our plan is twofold for the inflation-protected part of our fixed income portfolio. First, we will buy at the upcoming TIPS auctions so long as rates continue to look attractive. Ladder or dollar cost average into them, basically. And second, we will likely redeem our older 0% fixed rate I-bonds in the coming weeks and months and use the proceeds to buy new I-bonds, which currently have a 1.3% fixed rate. I will have a proper I-bond update as well as some pretty amazing videos with completely brand new content coming soon once we've wrapped up our current projects. We're hoping we'll be officially back the first week of March. If you want to be the first to know about what we've been up to, and what exciting news you should be expecting from us in terms of new content that will come out soon, do join our mailing list here on our website. We're hoping to get a proper email update out in the next week or two. For now, members and super savers, as always, I hope you enjoyed this video and learned something new. And if you did, I'd love to invite you to continue to support our channel through membership so that we can keep producing one-of-a-kind, objective, sponsorship-free videos for you and for a super saving community. Come for a chat at our next live member Q&A on March 15th at 5:30 p.m. Eastern Time. And check out our latest member videos. See you again soon with more brand new wealth-building content for your financial journey.